Well, welcome everybody. My name is Alfred Ritter, and I'm a CEO managing partner of Montgomery Securities. We're an old name, but a new firm. We're a investment bank in San Francisco. We're specializing or focused on fintech companies primarily and financing for emerging growth companies. We also specialize in digital securities, where it's kind of a nascent business. So in these webinar series, we're really talking to people in the digital security ecosystem. My guest today is Sandro Bruehlmann from Tavis Digital. Sandro, why don't you take a moment and introduce yourself?
Sure, happy to do so. Thank you very much for having me, Alfred, and welcome everybody who's joining the webinar today. It's great to be here. So my name is Sandro Bruehlmann, and I am the responsible portfolio manager at Tavis Digital for our fund of tokenized venture capital funds. I'm also a founding employee at Tavis Digital and helping the company scale. My background lies, I studied corporate finance at the University of Zurich. I did my master's degree there, and I wrote my master thesis about digital assets and how professional investors can actually invest into digital securities. I have a funny story about my first touching point with crypto or blockchain. That was back when I did an internship at the IT consultancy firm in Zurich. And one of my colleagues there, actually, instead of working for the company, he did trading cryptocurrencies the whole day and the whole night. And he became very rich on that. And I thought it was very funny. I didn't really believe in cryptocurrencies back then. Also didn't really believe in Bitcoin, to be honest. But then after 2 years at Tavis Capital, we started to look into the whole digital asset space. And we quickly realized actually that this is a whole new ecosystem that is now arising. And it's still in its infancy, but it has the potential to become huge. And that's when I started to really research and did my learnings within this market and learned about all the protocols. And that's how I got into the whole digital security space. And now I'm here managing an investment product for professional investors. And now I'm a true believer in all the digital security space.
Thanks, Sandro. Really appreciate that background. So your thesis or your when you were studying this, you kind of are doing what you studied then.
Exactly. Basically, our product is really also based on the thesis, or the other way around. It's how investors can really get access to the value appreciation of real companies of that nascent industry. And it was about tokenized VC funds. It was also about direct investments into token offerings. And that's basically exactly what I'm doing today at my job.
That's a unique thing that doesn't always happen. So that's pretty cool. So before we go into Tavis Digital, talk to me a little bit about Tavis Capital, right? And walk us through kind of the creation and of Tavis Digital, and talk a little, just want to understand, how it started. I mean, obviously, maybe it started from your sharing that information with the folks over at Tavis Capital. But tell me a little bit about that, and we'll talk about that for a little bit.
Sure, happy to do so. So basically, Tavis Digital is a spin-off of a well-established traditional asset manager called Tavis Capital. And there you see the similarities between the names. That's due to the fact that we actually share the same founders, and we also share the same DNA when it comes to institutional investment management. We actually looked at the whole digital assets and blockchain space back in 2018 or 17 even. And there was the whole ICO hype, and companies got bankrupt and investors lost a lot of money in that space. But nevertheless, we really have seen that the market has the potential to become huge. And there were nice projects out there. And our first touching point with a tokenized VC was actually in Switzerland. It was a medtech VC who tried to tokenize their share class. Unfortunately, it didn't happen at the end. But that was when we realized that there's a need for professional asset and portfolio management for that space to grow. Because we want to be the bridge between the traditional financing world and this new blockchain-based digital world. And that's exactly where we position ourselves. We then decided to really outsource it into a newly formed company, which was the birth of Tavis Digital actually back then.
And Tavis Capital is primarily focused on SME subordinated loans for SMEs. Is there anything, I guess, knowledge that was transferable from the core business to the digital asset space, or is it kind of all de novo and there was a steep learning curve?
Well, I would say both. Definitely, when we look at protocols, we didn't have that with SMEs. We didn't have staking there, but it's very comparable to fixed income products, let's say. But Tavis Capital is a leader for private debt solution within Switzerland. They are currently managing over 1 billion Swiss francs from Swiss pension funds mainly. So it's very institutional, and that was our vision from the beginning. We want to set up an institutional grade asset manager for digital securities. So therefore, that's definitely something that we share. We share the same institutional grade investment processes, risk management, and liquidity management. Although we don't have the same regulation within Tavis Digital, we apply the same standards there. So that's something we definitely share. But on the other hand, we definitely had a steep learning curve. We had to dig into the whole blockchain ecosystem, what's going on there, and it's really a full-time job to stay at the front there, to really be in the market and to stay up to date. So,
right, so asset. Oh, sorry, I didn't mean to interrupt you. Go ahead.
That's okay. Go ahead.
So asset management, obviously you had the systems down in terms of how to operate an asset manager, understood that, but had to learn specifically about the asset class. I think there was some learning on that. Now, would it be fair to say, I think, would it be fair to say that you're putting a more traditional wrapper around digital assets, digital securities, fund interest, et cetera, and then offering that to, like we said, institutional investors, that they can hold that they can hold, the bankable assets in a way. Is that fair to say, or is that not accurate?
I think that's fair to say, and that comes actually from our experience, and also what we see in the market is traditional and professional investors, they lack of the technical know-how how to handle tokens. So they are either not willing or not capable of handling tokens and buying them. They actually want to get access to the market, but they don't know how, and they don't know how to handle tokens, etc.
So you eliminate them needing to set up wallets and take delivery, manage a wallet and private keys and all of those fun things that they lose, and they lose all their assets if they can't get them. Like the guy who lost $220 million in Bitcoin because he can't find his keys.
Yes, exactly. So the idea actually at the status quo, at least, is really to wrap these assets into bankable securities that these investors are aware of. They know these, and even more important is they can book it into their existing IT legacy systems. They do not have to set up any wallets. They don't have to handle any tokens. They just invest into a bankable security, which has a Swiss ISIN, so you can invest via bank transfer, and KYC is done by the bank. And then they are invested in that space in different products there. I would say that's for the moment right now. In the future, and it might even take a few years more, investors will be capable of handling tokens, and then we will also change our position in that space. So the idea is not that we keep on going, wrapping these assets into bankable securities. The idea is really to take these investors by hand and show them, hey, look, it's nothing bad. We can let you into that space, into that market by traditional securities. And at some point, they will learn how to handle tokens. And that is needed for this market to evolve. Otherwise, without institutional money, this market has no chance to really grow.
Yeah, I agree. So it's similar in a way to what Grayscale is doing with Bitcoin, right? Because they're creating an investment trust to allow it's a traditional investment, but underlying what it's investing in is a digital asset.
Exactly. I mean, look, they're so successful, and I'm very impressed by their growth by Grayscale. It's impressive. But the underlying investment product is actually very boring, to be honest. It's just wrapping Bitcoin into a traditional security or traditional fund structure, whatever. But it's successful, and it's exactly successful the reason that I just mentioned. Investors, they are not capable or not willing to handle tokens directly, and that's the reason for their success.
Yeah, I mean, try having a conversation with an investor and saying, would you like to buy a token? And they're like, what? Do I want to play a video game or go on a subway? They don't quite get it a lot of times. Just one note to all the attendees. I didn't do this earlier, so my apologies. But we will do a Q&A session at the end. You can either use the question and answer methodology and type I'm looking at that, or you can type it into chat. I'm looking at that. Or you can, well, let's just leave it at that. So I think you can raise hands too, but I'm not gonna do that. So just type it in. Appreciate that. Later, as we get down the road on some of these, we'll allow more interaction. So we've talked about kind of the background. We talked about what you're doing. Now I know that you have different investment products that you talk about, and I think you're furthest along with the VC product, but there's others, real estate and other products that you have. So why don't you talk a little bit about those investment products and like what type of products you're offering? And I think we talked about it a little bit, but more specific in a relationship, I mean, to what I think what you're investing in, what the thesis is in the different spaces, as much as you can share on this call. Obviously, this is more informational. So maybe want to talk a little bit about the products and the kind of investment angles or investment theses that you're operating on those, in as much as you haven't covered that already. Sorry.
Sure, more than happy to do so. So the idea is not that we only are a fund of funds. That's not the idea. We set up an asset management company that's offering a whole suite of different investment products, all in the area of digital assets. You mentioned a few of them, and basically we look at the space as a 3-layer pyramid at the end. So we have these base layer mechanisms, which are staking and mining, which are used to produce or to build protocols on top of it. And on top of these protocols like Ethereum or Cosmos or Avalanche are the real assets which are going to be tokenized or digitized, however. So our goal is really to offer investment products in all of these 3 parts. Right now we are live with our fund of tokenized venture capital funds, which is heavily investing into tokenized VCs worldwide and giving investors exposure to real brick and mortar companies through these fund investments. We can also make direct investments with this product, but also only in token offerings. So I would say it's fair to say that we are probably the only asset management company that is managing a fully digital portfolio of real brick and mortar companies as an underlying. That's the product that I'm responsible of. Besides that, by the end of the month, there will be a new staking product where we're going to let investors get access to a basket of different protocols which are offering staking. And it's very comparable to a fixed income product as it generates a yearly yield on these protocols. So it's also wrapped in a bankable security. And our core competence, I would say, lies really within these digital assets area. So selection of protocols, DeFi, but also, and this comes from Tavis Capital, our background, all the real assets. And I'm not talking about public markets. I don't see the benefit of tokenizing a bond right now. Definitely there are some efficiency gains, but it's not something very interesting. The more interesting part really relies in the private markets, and that's where we're coming from. So we're coming from the private debt side, and with the background of the team also from the whole private equity venture capital scene. And so our goal is to offer interesting products for these type of assets or for real assets in private markets. And due to the fact that these assets are tokenized, we can set up totally new investment products with specific features in it that were not possible before. For example, the tokenized VC fund of fund. we can offer an enhanced liquidity compared to a traditional fund structure. So VC is now investable for retail investors, let's say. And we include all these features that are made possible via tokenization into our investment products to make them attractive for investors. And I mean, in today's asset management world, it's all about fees. So whoever offers the lowest fee structure is definitely in the top 3 to look at. It's an unfortunate thing, but it's the reality. And we truly believe that due to these efficiency gains of the tokenization, in the long term, in the mid to long term, we can definitely offer products at lower costs with more efficiency behind it. So that's the goal of Tavis Digital when we talk about our product lines.
So right now, the investments that first of all, it's a pretty nascent space, right? So it's not even I don't know, I guess it's a baby, but it's very, very, very small. And so and of tokenized VC funds, I only know of a few. So there's not a lot to choose from at that point. So you're early, is what I'm saying. And but you can make direct investments in, companies that also are tokenized are kind of few and far between as well. So how are you finding investments? Like what, and how are you making investments in those spaces, given that there's not, and are you seeing more opportunities, more digital securities being offered that you can invest in?
The interesting thing is not how many tokenized VCs are there right now at the moment. The more interesting thing is how much will there be in the future or in the coming 2 years. And we are now in touch with several dozens of VC fund managers all around the world, especially in the US and also in the Asian region, who are thinking about tokenizing a share class. And sometimes it's an existing fund, sometimes it's a new fund, but most of them are emerging fund managers. And they really put themselves at the forefront of this technical revolution by tokenizing their funds. So they really walk the talk when they are investing heavily in the blockchain ecosystem. There aren't that many right now, agree on that, but we are, as I said, in talks with so many VC fund managers out there, and this is one of our biggest edge that we have. We have these relations to these fund managers, which allow us to invest them at the very early stage. So we're probably going to be the seed investor for the tokenized share class. To get access, we help them in setting up the tokenized fund in all the tokenomics. And so that's one of our duties that we have. I think it's our task to really help this market grow by educating also fund managers about tokenizing their share class.
So you're seeing existing VC funds potentially tokenizing their existing LP units or classes, or creating a class that is tokenized and so that would allow for secondary market liquidity, theoretically at least, for the asset class that traditionally you have to hold to maturity, basically, and 10, 12 years, whatever the life cycle of a fund is right now. But so that's kind of the idea there. Where do you expect these things to be trading? And then would you be actively trading them in a more of a hedge fund style, or what would be? I just kind of understand kind of what the on the fund of funds level, or would you be less active on the trading of those?
To begin with, when we started this investment product, we really started with our own money because we wanted to see whether it works out. We wanted to get operations in place and build up a track record. Back then, in July 2019, there were basically no exchanges at all where these tokens are tradable. What happened within the last, I would say, 4 or 5 months, that's very impressive. We have seen so much development in digital securities exchanges. Let's look at Fusang in Malaysia, fully regulated exchange at Luban, and is offering only tokenized or digital securities on their platform. Or we have RGX and the SDX in Europe. We also have HKX in Asia. We have Liquify in the Middle East, or we have T0 securitized markets and open finance, which was acquired by INX in the US. So there are many marketplaces coming up into that space and really providing a platform to trade these securities. The other question, whether we perform active portfolio management, definitely yes. It's not that we, right now, as you correctly mentioned, there's not that much liquidity in that space. But with these upcoming exchanges and the developments in the recent months, there will be liquidity. We're not talking about billions of liquidity in it, but it's enough if one investor can decrease its exposure in a certain fund, which was not possible before. It's already a gain in efficiency. And our edge is really, as I mentioned before, our relationships with these fund managers. So we perform traditional due diligence on each and every fund manager. We go through the portfolio bottom up and make up our mind about the potential NAV of these tokens and when exits are to be expected. So this gives us a certain edge over other participants in the market. And let's say we know, or we hypothetically know or can expect an NAV at a certain level at that time, and we see that the tokens are traded below that NAV on certain exchanges, we can buy them. So we can increase our exposure in order to generate alpha. Or we can make it the other way around and sell tokens as soon as we think it's overvalued. So definitely that's and as I mentioned before, new products, that's also a feature that was not possible before for a fund of VC fund manager. It wasn't possible to easily increase or easily decrease his exposure in certain funds, but now that's possible. So that gives an additional portfolio management feature in that product, which was only possible due to tokenization.
Question. You mentioned, so if you're looking at a NAV of a VC fund isn't marking to market specifically, right? So, I mean, for example, if you have an investment in Coinbase that you did at a $4 billion valuation in it, and I don't know what we think it's going to be IPOing at, which is a later question I was gonna ask you what your thought was. So maybe we tackle that now. So I mean, the NAV is going to be far below, because it's only can adjust them on kind of actionable. I mean, unless there's a robust, I guess once there's a robust secondary market, you might be able to start getting more accurate on NAV. So where do you see, how do you even, I mean, how do you evaluate that? Just, the difference between NAV and the imply in the, because there hasn't been an event to market in the underlying portfolio.
So basically, or theoretically, it's about calculating cash flows or expected cash flows, which we discussed with the fund manager. You mentioned the Coinbase IPO, which would be a liquidity event and therefore represent the cash flow in the portfolio. So we go through the portfolio, discuss each and every company and expect exits at which time, at which valuation, and what does it mean for the fund and what does it mean for us. So this gives us a certain cash flow expectation or a hypothetical cash flow that is based on our base case scenario, which was discussed with the fund manager. Thanks to this cash flow, we can calculate a hypothetical IRR. And with this IRR, we can calculate the NAV or project the NAV into the future. And our model is based on that. Definitely, as you said, it's not always on time, that's for sure, but it gives us a certain value that we can take as a T0, let's say. And then we can base our decision to whether increase or decrease on these assumptions that we made together with the fund manager. So this gives us, it's all based on cash flows. Of course, it will never be exactly as we discussed it, that's for sure. But how does one value a VC fund? It's always based, either when it's a newly funded, it's always based on the team, or if there already is a portfolio existing, it's based on the existing portfolio and the upcoming portfolio companies. So that's always a guess there. But we can base it on discussions with the fund managers. And this gives us comfort to really take these NAV and see whether we want to increase or decrease our exposure.
And so the VC funds that you're investing in have information rights into those underlying companies, so you're able to leverage that information to be able to determine what you think the projected, some sort of consensus projection of cash flows that then you're discounting.
Yeah, but it's never insider information. It's always public information, and it's always a guess from the fund manager. So it's not the information that they get from the companies. So you mentioned Coinbase. We're also an invest Coinbase through a fund investment, but we didn't receive information about the upcoming IPO prior to the public because that's just not doable. And when we calculated the NAV for the token, that was back to 2 years ago, something like that. And there was never a discussion about Coinbase going public. So it was based on the assumption of the fund manager.
Okay. So, and well, let's shift gears a little bit here. You mentioned the target customers. Let's just talk a little bit about understanding who are the it's institutional grade. So obviously you're looking at institutions, but give me a little flavor on kind of minimums, right? What kind of size these people are investing in, and are you recommending an allocation towards this asset class? And if so, how do you, in a person's portfolio, are you following kind of the, I don't know, the 5 to 10% level that a lot of people, Morgan Creek folks and things like that I hear. Just so I wanted to understand a little bit about that and understand who the target is for your clientele as an asset manager.
Sure. So the client base, definitely, as I said, within Tavis Capital, it's mainly Swiss pension funds, but it will take a few more years until Swiss pension funds will allocate money into the sector. That's for sure. But we're working on it.
Good luck with that.
Thank you. Therefore, right now, definitely the target investor should be some family offices, high net worth individuals who have the risk appetite, especially for the product that I'm managing. It's venture capital at the end of the day. But we also see insurance companies interested in these products, also private banks trying to get that on their product shelf, but also for high net worth individuals. Our products are structured that we can't sell them to US investors right now. And the minimum is basically always $10,000. So it's a very low barrier to get into these products. That's also, we start with friends and family, and then we go into high net worth individuals, family office, and the level of institution always increases until we are at the Swiss pension funds. So that's from the client investor base. Regarding an allocation recommendation, I can't do this, unfortunately. I'm not a wealth manager or investment advisor on that. I'm a portfolio manager. I'm managing my product. But personally, I'm invested in cryptocurrencies, definitely in the 5 to maximum 10%. That's what I can say. I can't recommend it. Sometimes it works out, sometimes it doesn't. But yeah, I mean, 5 to 10% definitely something one should consider. Maybe maximum 5%. It's something, it doesn't hurt if it gets lost. So, I mean, and you need to have the nerves to really take losses of 60 or more percent a day, but also to be happy when it goes up.
Yeah, it's, I mean, the overall, if you look at the cryptocurrency market, obviously that's pretty volatile. But I would assume when you're dealing with digital securities and brick and mortar companies, a little less so, hopefully. And there's really no relationship to the underlying price of those and the underlying Bitcoin or Ethereum that they may or may not be, the protocol they may be operating on, which is sometimes a explanation that people don't quite understand. So in family offices, high net worth individuals, those are the people that you see as the early adopters in that space, or that will start allocating towards it so kind of similar to what an emerging fund manager would be looking to attract as their investors. So understood. I mean, we talked about it. Any competitors in the space? Any traditional asset managers looking, where do you see that going, right? The kind of your specific digital asset manager business. I mean, where do you see that? You see people coming into the space, you see other competitors. I think of digital currency group, and we mentioned Grayscale earlier, but I can't think of any other kind of fund to fund type of structures that are out there?
So it depends what you see as a competitor. I mean, at the stage of the current market situation, I think competition is something good. It pushes each other, and there's still a lot of room for other players in the market. There are some competitors out there, you named a few of them, and we can't compare us in size with them, of course, not yet. And but what our edge is really, we have innovative and interesting investment products. We are coming from the traditional world. I think that's probably our biggest edge. We're coming from the traditional world, and now we're going into the digital. So we have a track record within the traditional asset management space, which most of the others don't have. And we are now really getting these operations in place, and we have, let's say, some kind of first mover. Sometimes it's a disadvantage, sometimes it's an advantage. But regarding competition, I have never seen a comparable product as the fund of tokenized VC funds. On the other product sides, there are some products that are kind of like the ones that we are issuing, but always with certain features that we have included, which others maybe don't.
Got it.
Maybe just a quick add to the traditional world. I mean, if we look at Switzerland and competition in Switzerland for digital assets, we have all the large banks, and they would never admit that they are looking at digital assets or blockchain solutions. It's funny because if you check LinkedIn or the teams there, you always have a head of digital asset solution, digital asset investments, whatever, but they don't talk publicly about it. And that's also one thing that is an edge for us. It's an advantage for us. We can move fast. We are very agile, which are large or traditional bigger asset managers like a Partners Group aren't. We can't compete with them, but we in certain industries. But we position ourselves in a niche, and we try to do the best within this niche, and that's our strategy there.
So you don't see UBS or Credit Suisse coming into the market soon?
Well, hopefully they do. I mean, it would definitely help the market. I mean, I just had a call yesterday, a conversation with a potential investor, and he didn't really believe in blockchain at the beginning. It took a while, and then his argument was, well, what if the big banks and the large financial players, they don't want to have blockchain and they try to block it via regulation or something like that, make pressure on it? I was like, blockchain is not an enemy of a bank or a large asset manager. It's their friend, because it gives them the possibility, especially for a bank. It helps them in the back office and the efficiency gains there. That's number one. But more interesting is that it helps them get new client groups and a totally new business unit that can offer new investment products to a whole new client base there. So it's actually something good that can benefit of it. But it might take a while until all banks realize that.
Yeah, well, I mean, I think it's an evolution, not a revolution, in my opinion. Especially when you're dealing with very regulated businesses, which obviously anything in the financial sector is. Which so maybe we shift gears a little bit again. And so you mentioned Tavis Capital is a regulated firm. Tavis Digital is seeking to become a regulated firm, but is operating under some exemption, I'm assuming. But just so one is, what's the overall attitude for digital assets and digital asset securities in Switzerland, in as much as you can opine or provide some insight into it, and then how specifically are you regulated, and like, for example, institutional investors need to you need a custodian in order to hold the funds for institutional. So how does it work in Switzerland is basically what my question is. Like, overall, what's the attitudes to digital assets? How do you see yourself being regulated in now, and then how do you think that will change in the future, and is your approach and your view towards that?
So what the SEC is in the US is the FINMA here in Switzerland. And in my opinion, I think FINMA is acting very progressive with regards to blockchain. Also the government, there will be a new law. I think it's Q2 or Q3 this year, which will allow also to transfer ownership on chain. And this will definitely help the whole market scale again. And we have the famous crypto valley here in Switzerland. Maybe you know this. That's also due to the regulation, which is pretty progressive there. So basically the Swiss law, it's always technological neutral. So it's never written about DLT or any other technology. So this makes it easy to adapt to new technologies. And I think that's a good thing. Then our regulation within Tavis Digital is we are a SRO VQF, that's a self-regulatory organization within Switzerland. It's the largest one. And we're going to apply for FINIC, which is, let's say, FINMA Light regulation by the end of 2022. So our goal is really to establish Tavis Digital as one of the first fully regulated asset manager within the space of digital assets. And we are fans of regulation, to be honest, because that's what the market needs. I mean, crypto and blockchain, it's not about these crypto nerds who are sending money around the globe. We need regulation in order for this market to really take off. So regulation is a good thing. That's number one. Then being in a jurisdiction which has a history in wealth and asset management like Switzerland is also a good thing. I mean, here in Switzerland, we're currently managing over 20% of the global wealth in the traditional financing world. And I do not see any reason why this shouldn't be the case for digital assets. So being in Switzerland in a regulatory friendly environment with the history of being the asset manager or also the custodian of choice is definitely a good thing. And the other thing is Crypto Valley, where we have a very nascent industry of young technology companies. And the funding for these companies is also increasing enormously, or has increased enormously over the course of the last 2 years. So it's the right place to be, and we have the regulation in place that is needed for the digital asset market to really grow.
And those companies developing in Crypto Valley, they're all kind of layer one type of things, protocols, mining traditionally, but now you're getting more higher level companies emerging there. Is that accurate?
That is accurate, absolutely. And that's what we see not only in Crypto Valley, but all around the globe, I would say. And that's also the goal of the investment product of the fund of tokenized VC funds. We want to invest in companies who are shaping the whole ecosystem, who are providing blockchain infrastructure, and who are building on top of these protocols, applications for the real world. Because these companies, they have the biggest return potential if you get in early. And I could talk about VC and all the temporal distortion of the IPO, but there are many reasons why it's now the right time to invest in early stage technology companies, especially in blockchain. I mean, history repeats itself. What happened back in the 90s with the internet revolution, we see the same investors in that space. And we mentioned it earlier, Coinbase IPO, and in my opinion, this will have a very similar effect to the whole industry, and especially for traditional investors, as the Netscape back in the mid-90s. Because it's really the first time that a crypto or blockchain-related company goes IPO, and which will attract traditional investors who are either not willing or not capable, as I mentioned before, to handle tokens, but they want to invest in that company. They want to invest in that market, and now that's their time. So.
Yeah, my only not regret, but my only feeling about Coinbase is it's great that they're IPOing, and I don't know. Do you have a prediction? You have any idea? You have a prediction on what they're going to IPO at, or any thoughts about it?
Well, I've heard numbers ranging from 20 to 60 billion. The valuation of 50 to 60 billion is based on the futures on FTX and so the trading there. I can imagine that it's in the range of 30 to 40 billion. And if you look at, for example, a large Swiss bank, it's even more than one of our biggest banks here in Switzerland. So it's very impressive what Coinbase did.
Yeah, I mean, I think their last valuation was 8. I think their last round was 8.
But that was back in 2018.
Yeah, it's been a while. So yeah, that'll be interesting. The only regret I have is that they didn't exit through doing a digital security, that they're just, that they're going and doing a traditional security. But, hopefully those companies that are in the space now, that are, the new Coinbases or the next Coinbases, will have that as an option to issue a digital security instead of a traditional IPO. So we'll see. We'll see if that happens. Listen, I think I want to open up for questions here from the audience. So I do encourage anybody in the audience who has any questions to offer them. In the meantime, I just, a lot of times, I talk to companies and they have kind of an ESG angle, or something else in a project, a cause, part of their mission, or personally that you support or are interested in. You want to share with any of those type of kind of environmental type of issues that you're looking at or considering or exploring?
Sure. So from an investment perspective, we have ESG guidelines implemented within our investment due diligence processes and everything investment related. So we do have some exemption criteria there. That's number one. Then besides that, we have Christian Speckhardt as our managing partner, as one of our managing partners. He was the deputy CEO and CIO of Responsibility, and he built the company to over 3.2 billion assets under management and became one of the largest impact investors. So he's living ESG in his daily life, and he's pushing us hard to also implement it in our company. And I think that's a good thing, and it needs to go there. Then what also is very interesting for ESG is blockchain itself. It has a huge potential there, because if you look at the offering of some banks, they all are focusing on ESG. They're heavily marketing ESG related topics. But if you try to invest in these investment products, it's often very hard, as there is a minimum investment. It's mostly only for institutional investors, and it has become not an advantage if you have it. It has become a necessity. You need to have ESG implemented, and you need to invest some money into ESG related topics or funds. So blockchain can really help scale that market and make it retail available. And let's take carbon credits as an example. By tokenizing carbon credits, they can be made tradable 24/7 globally. And this will really help making an impact in the whole space. So the other thing that's also a good thing is the shift from mining into staking from a protocol view, which is also much less energy wasting. And so blockchain really helps the ESG related space, and we try to also launch a product within that space in the coming years.
Yeah, so somebody was asking, just environmental, social, and governance is ESG. Just to clarify that for folks. So okay, got it. So yeah, I mean, I think there's certainly the greater DeFi space has a whole element of certainly social and governance perspective that I think is very positive overall. And
I mean, also, if you look at ESG, it's an environmental, social, and governance. It's not only about making the world greener. It's also about financial inclusion, and that's exactly possible via tokenization. And therefore, blockchain is one of the hottest topics when it comes to ESG.
Yep, I agree. Okay, well, listen, I really appreciate your time here today and answering our questions. And well, let's see. I got a question here. So let's back up a second. So it's a company in the U.S. looking to do a STO, planning to launch a fungible utility token. Okay. but concerned with IRS to require tax recipients around the world who receive the token through a proof of work is getting a little too detailed for me. But basically, question one: what's the regulatory environment issuance of STO, security token offering, and what are the tax requirements for recipients in utility tokens?
From a US perspective?
No, from a Swiss perspective.
From a Swiss perspective. Well, I'm not a tax lawyer, so I can't really help that. We also, if we come across such topics, we always get legal help there. So unfortunately, I can't really help with this question here.
And in terms of regulatory environment for issuance of an STO, I mean, I guess it depends on what the STO is. If it's I mean, if it's clearly a security token, and I'm assuming that is following certain exemptions to registration and registration requirements in Switzerland.
Yeah, I mean, you mentioned the exact right thing. It's always about the underlying. What is the underlying? If we look at real estate, for example, if you try to tokenize real estate or the equity in real estate, it's basically impossible. You have to go through so much processes. And here in Switzerland, we have the so-called Lex Koller, which restricts foreign investors to participate in real estate here, in the equity of real estate. So the only thing that you can do is tokenize the cash flows arising out of the real estate. So let's say you get the rental and all that stuff, and also part of when you sell the real estate. And then it really depends on what the underlying is, and the regulation is always based on the underlying, on the underlying.
But in the US, a utility token. So let's just shift gears a little bit here. I know that if you sell a utility token in the US, it's treated like I'm selling a cup, right? And any physical product. And so every time I sell that utility token, or buy and sell it, right? Then it's taxable, right? And it's taxable for the underlying company that sells that token, right? As revenue. Is it similar in Switzerland? Is it a similar thing, or do you not really deal too much in utility tokens, so not really something that you know about?
Well, here in Switzerland, so FINMA issued a guidelines which mentioned payment tokens, utility tokens, and security tokens. That was back 2 years or 3 years ago. And they always take this approach. They take a look at the project and decide whether it is a utility or a security token. But my recommendation is really be careful with pretending that it's a utility token, because it can easily go into security token, and we see that with Ripple right now. And you don't want to get into that situation. So make sure you get a good lawyer. There are many law firms in Switzerland who are really focusing on DLT cases, so they can definitely help with that question there.
Yeah, I would agree. I mean, I think we have the Howey test here, and but I think if it walks like a duck, sounds like a duck, it probably is a duck. I think the same thing goes for securities, and there really are no shortcuts, I guess. With
the Howey test, everything is basically security.
Well, yeah, I mean, I think it's maybe a little extreme, but regardless, I think maybe we're a little more conservative here in the U.S. in terms of from a regulatory standpoint, but I think I have my own viewpoint of that. I don't want to share it on this webinar, but I think listen, we want to make sure you get it right, and they don't want to have the negative fallout from anything that might happen where people lose a lot of money. So they're going to err on the side of caution. Listen, I think that's what I got for today. I don't have any more questions, so I appreciate your time, Sandro. And if anybody in the audience wants to get in touch with you, is there a way, or Tavis Digital, how do they find you? You got a Twitter handle or a website, I believe. So maybe you want to share that information, so if people want to find you, they can.
Yeah, definitely. So the easiest way is definitely go on our website. It's tavis-digital.com, and there you find all the related information about the products. And if you want to learn more about these products, just get in touch via email or call us at any time. And you can also reach out to me on LinkedIn, and that's also an easy way. And I can make the follow-up with the respective people within our team if needed. So that would be the easiest way to get in touch with us.
Great. Well, again, appreciate it. As always, everybody stay safe out there. We're in a unique world, so I appreciate your attending, and Sandro, really appreciate your time, and we'll look forward to seeing you guys on the next webinar. Thanks so much.
Thank you very much,
Appreciate it.
Alfred, for hosting me, and thanks everyone for attending. Thank you.
Great. Bye now.